Hey guys, excuse me. This is Simon with Trade and Perform Coaching, doing the trade review for Friday. Really, it's just my homework that we're doing here today. I didn't trade great on Friday. I didn't lose money. I made a little bit of money, but I did not have a good day. So, as always, I want to go back in and see what the heck I could have done to improve. Which, at the end of the day, as a trader, that's all we're trying to accomplish, right? We're just trying to see what we could have done to do better. If you'll take a moment and read, and you'll hear my kids playing in the background. And hold on a second. Hey, sweetheart. Sweetheart, hold on one second, guys. Okay, and normal everyday life got in the way there, but those are my beautiful little 4-year-old twins. And it's hard to tell them no, right? So, anyways, I wanted to see what I could do to improve my performance. So if you'll read the disclaimer really quick, and I'll get rid of this. It basically says past performance is not indicative of future results. You can lose your ass trading futures. Have a risk trading plan. Do not trade capital you cannot afford to lose. This is for educational purposes only, and et cetera, right? So the first thing, number one, when I went through my journaling is very important in trading. You should go through and say, well, hey, what was my mindset? Or why is it that I'm responding a certain way? And the thing that's kind of got me all in a funk is this whole stimulus package, right? And I'm not for or against the stimulus package one way or the other, but it's playing with me, right? Like, why does the market keep... So one thing I've noticed is I've geared my trading. I used to trade by seat of my pants and what I think about the market. I've changed my trading to a very structured, almost algo-like system that I still want to think about the market, but I want the algo to kind of go in line, right? And what I've run into lately is I don't think the market should just go up on the possibility of stimulus right now. That is completely wrong. Let me tell you right now. That is as wrong as can be, because it doesn't matter what I think about the stimulus, right? Secondly, in this market in particular, long is easier than short, right? And I have a predetermined short bias that I've been fighting for years that also drove the evolution of this trading methodology that I have, right? And then the last piece is I don't like the randomness of the news that's coming out around it. And all of that is kind of combined to mess up my trading a little bit. Thursday was no big deal. Thursday was a no-nothing day. And it was just trading in a very wide random range. But yesterday I had opportunity and I did not capitalize. Now Wednesday I had a very good day. Tuesday I had a very good day, right? And the other thing that I find interesting is that because I had a nothing day on Thursday, and I had a small day on Friday, I kind of reflected on, well, wait a minute, the whole week sucked. But it didn't. It was actually a really good week. But that one trade sucked. So let's jump to it. And what I'm going to do is, so this is mainly geared for people in my room. If you get something out of it and you're not in the room, God bless you. I think that's great. But what I want to go through and say, well, hey, how could have I done better? And so if you look, I was trading both ES and NQ, but the major focus on the room is on ES. And so if you look when we're coming into the day, right, so this is a 1.5 range bar, much smaller than a 5-minute chart. So for those who are not familiar with small range bars, this is what a 5-minute chart looks like. I don't trade off of a 5-minute chart, right? The target on the day, I just want to go really quick. So if you look, right, we gapped in Asia. We never retested prior day's high, right? The target, as I put on StockTwits and Twitter, was this 34.68 up for me. That was the original location. And then I'm going to guess that Sunday evening / Monday morning, we're going to tag this 34.92. So my targets were still up, right? And so I'm going to talk about something that's really challenges me, right? I want the market to go down. I did, right? Why? Because I like to find good locations from lows and push up back high. But if you look at how the market structure worked, and let's kind of work it backwards. How the market structure worked was, here's 8:30 open, approximately right here. We pushed down. We broke this smallest swing, right? So I'm hunting stops, and there's only 2 locations there are going to be stops here. Stops here and stops here off the 5-minute. Well, we got that right over here at 9:20. It actually got behind that, and I just didn't acknowledge it, right? It also did a 50-60 retrace, which is also part of my trading methodology. If we come off the low here just before London Open, and you can see we pushed right into the 50-60 retrace, which was 34.51. So that's the first fail I had on the days. I should have recognized, hey, that's a 50-60 retrace back off of after we tagged a new high. And then if you look, when we tagged above the European high, which is right over here, all right, we took out the stops and we rolled back down to the 50-60 retrace. So that alone in structure is great. Now, you got to remember, when I'm trading, what am I trying to do? I'm trying to load as many contracts as I can with the smallest stop possible. I know it's the the impossible thing. It can't be done repeatedly. I can tell you I can do it repeatedly. I do it repeatedly. I just got to keep my head about me, right, and stay focused on the job at hand. That's all that has to be done to get this done, right? So number one, the 50-60 retrace worked. It gave you a great location for the launch to the upside. We knew that they were sitting out there with a stimulus plan that it would push higher. So again, that's a fail on my part, and it shows me that I have room for improvement to get better. And that's just good news for me, right? You got to keep your mindset in the right place, which is, if I fail at something, I've got to learn from it and get better. So that's the first thing, right? So that was number one, right? So if we look at that 34.51, so let's go look at how the structure broke out now. And I'm going to copy this over onto this chart. This is chart number, I don't know, so I think I'll just hit this button and it'll tell me really quick. Chart number 6. So we're going to get rid of this. And I'm going to lay it over here. And I'm going to erase all these lines. And then I'm going to superimpose chart number 6 and the daily on top of this. Okay, so there's the whole, that came off the 5-minute chart, right? And now we're on the 1.5 range. So finally, as I'm looking at this, right? So if we look into the high, right? So this was the, so I'm going to show you all exactly what I'm talking about. We came into the European high, right? Now, I don't short just on location alone. I need the setup. There's no setup here, right? And there's no setup here. And I'm looking for these, what I'm looking for, without telling everyone what the algo calculates, is I'm looking for a purple bar followed by one of these little triangles. So I'm not going to go into any more detail other than that, other than to say that's my algo. That's what I'm looking for. Or the pink bar followed by a triangle, right? Or I don't even need the triangle, because the triangle doesn't form till 1 bar later. So it can just be a wick on top, right? So if I look at this, I really never got the setup that I wanted. Why is that? If I had taken, it didn't set up here, which would have been nice. I would have loved for it to set up right over here on the right-hand side at 836. It didn't do it there either. And and by the time this one, this did trigger properly, actually, the entry would have been on this bar. But I've even narrowed it down more specifically what I want my entry to look like, even though it causes me to miss some really good trades, is I want my entry to look like this. This purple bar followed by a hammer or some bar with a significant wick that then forms this triangle underneath. Again, you don't see that in real time. That triangle doesn't form till over here, but I'm cheating on it, right? Why? Again, remember, my pursuit is how many contracts can I trade and how small a stop can I get and still get the win, right? So if you look here at 6 in the morning, this is pretty much the picture of what I am looking for. Right here, I'll make that bigger. This is pretty much what I am looking for, right? And long story short, that's perfect. And guys in the room, just one ad here. If you get this bar right here, see how you got the same purple bar, and if you entered here, and if the next bar or that triangle does not appear on the next bar, you should close that trade immediately. It reduces your stop from 1.5 down to about 3 ticks most of the time, right? So again, that's just a note for the people in the room who are using the methodology, because we're trying to cheat, right? So again, if you get this, you got the bar you were looking for, but it doesn't form the triangle underneath, I would close or move my stop right up to my entry as quickly as possible, because it's not what I was looking for. What I'm looking for is this, and all other variations, I just want to keep my stop mega tight. Why is that? Because if you look at this, even if I had taken, well, I wouldn't have taken the stop here, but Even if I took a stop, let's say on this bar, well, this bar wouldn't have been a candidate, but this bar would have, right? It still was profitable. Let's find a losing trade. This one right here. So see this? And it would have been net the same, right? And remember, we want this purple bar to usually show up unless it's on the right side of a V-shaped pattern or a head and shoulders pattern. We want this to form in a downhill slope, right? So, and it's very specific what we're hunting. So, at any rate, I digressed a little bit, and I want to stay on track. What I'm looking for is basically this right here. By the time this bar closes right here, I want that little triangle to show up. That triangle tells me everything is kosher. And then I have fantastic fat 1-to-1 RR to the upside, right? And then all you have to figure out is which side your bias is on, and I can tell you right now, in this market, long is easier than short, right? So now going back to 830, right? The short that I wanted simply did not set up. I could have taken it here. It would have been profitable by a little bit of money. And you got to remember, for those who are watching this, what type of day trader are you? Are you trying to catch, are you the, hey, I'm a swing trader, I use big fat wide stops? Or are you very precise in your entry, right? Because these are giving you 1-to-1 pretty much in the next bar in terms of your risk reward. So as you're running along, and you're looking for your trade, right? You can see that we came into the 50-60 right over here. Here, I'm going to get rid of this. Let's see if I can just slide this over or slide this up so I can get rid of it. There we go. So we're into that 50-60. That's what the pink and the gray lines are, right? So now what I'm doing here is I'm looking for a couple of things. Let me erase all lines. Sorry, you know this never goes as smoothly as I want it to. Oh, because it's coming off the other chart, right? So no big deal. I'll go to the 5-minute and clear it out. There we go. So we know we're back into the 50-60 into this area. And you'll notice through here I don't get the setup that I want as we're pushing down, which is a purple bar, right? Followed by a triangle on the bottom of it, right? Which is my signal. But remember what I said about if you get some type of remnants of a head and shoulders or you're on the right side of a V, the long actually came right here perfectly, right? I got the purple bar, I've got the wick on bottom. I could have entered right here on the close. Actually gave me plenty of time to get into that bar because it retraced a little bit on that bar. That trade right there from 34.54, I mean, it just never stopped you. That's all there is to it, right? In addition, once we broke, if you'll notice, right, there was another trade that was available on here. So let's say we used this structure over here as a head and shoulders, right? Left shoulder, head. I kind of put it like that, right? So I know, right? I know that once I close over that left shoulder, and there's a lot of ways to look at that left shoulder, right shoulder. You could also said the head and shoulders formation was right over here as well. It was one of the two, right? But once I look at that structure and I get over to the right shoulder, so that was one trade that could have made me profitable. And what I did was I got pissed because the market started going up so fast, and I walked away. So this is where my mistake was. I got frustrated, and I walked away instead of staying on point to capture the P&L. And the P&L was there to be had and to get paid on, right? And that all falls on my own shoulders, right? And that's great news because it's room for improvement, right? Which I stress to my coaching clients and I stress for myself constantly because this is a performance art, right? You got to keep your head in the game. Now, I got to tell you, I used to have this terrible habit that when the market would piss me off, I'd start fighting it and start shorting against it. And I didn't do that. That was quite a long ago, that behavior, right? So it's still an improvement. You always got to think progress, not perfection, right? And then where can I get better on Monday, Tuesday, Wednesday, Thursday? Because the market's going to come back and the opportunity is going to come back, right? So this would have been an example right here of we broke this left shoulder right over. So we broke the left shoulder cleanly right over here, right? That's usually a breakout to the upside trade. This is a backside test. So ideally what I would have liked is for this bar to be purple. It wasn't. And then get this hammer bar right here and then have this triangle show up right after this bar prints, I'd have been like, boom, I'm off to the races, right? I didn't get it there, but we already knew that the market had bias to the upside. I would have taken this long, and by the time this bar printed, notice the triangle never showed up. I simply would have moved my stop here. I have 1.5, maybe 1 3/4 points risk. I get that 50% of that risk off here. It's a free ride, and then I can decide whether I want my stop, how I want to use that stop. But really, I would have kept the stop here almost no matter what. The way I handle this, I would have kept my stop there, and I would have gotten stopped out here for a break-even trade, right? But if you look as the market progressed through the course of the morning after the news came out, look how many bars actually gave me profitable trades. So this set up perfectly, right? This would have been my entry right here at roughly 66. That had a maximum favorable excursion all the way up to 73. As we're coming back down, right? Remember, I'm trying to find a continuation trade, right? So let's say I was going to use, I wouldn't have used this. I would have wanted some kind of pullback. But let's go ahead and use it just for the sake of having the conversation, right? So let's say I took the trade right here, right? I still end up with I would not have taken, it cannot be this bar. This cannot be your bar for your long. You have to have some kind of downward motion. But this one would have, this one you could have at least said it had some downside. This is a break-even trade for me, right? Again, we're coming down. This bar had no wick. I do not like taking these trades when there's no wick. If I had taken it, that probably actually would have ended up being a stop. I would have had to take it over here, and it actually would have ended up being a 3-point stop. Again, we're coming off a left shoulder, right shoulder formation there. I'm just not taking this trade. I'm still looking for location. And plus, remember, this is the 3467. I'm not looking to go long here. As a matter of fact, my normal thought process, if you follow my stock twits or Twitter, I would have said, hey, that's where we're looking for potential exhaustion, right? Even though I was unwilling to short it at that point, you still would have said that's where we were looking for potential exhaustion. And again, I'm not going to examine the shorts in this area because I was not willing to short yesterday, pure and simple. If you look as we finally pull down in the afternoon and looking for setups, right, you can say, okay, well, we danced underneath, we finally got underneath the 3467, and we'd start building energy. So I would have said this was an okay long. Again, you got about 3 to 4 points off that trade. I would have said this was an okay long. As soon as this bar formed, and it did not form a little triangle underneath this bar, I would have closed that trade out, right? I just would have closed it out for a small, tiny loss. And then when you look over here to the right, what you're looking for, right? Again, this would have set up perfectly right here for the long. You would have gotten your 1.5 point 1-to-1 RR, and you would have ended up stretching 63 to 70. Again, the range wasn't really great. It was not really great in the afternoon. That's all there was to it. And then on this last set of pull downs, it just did not, it didn't trigger at the end of the day. As a matter of fact, you do not want this bar. It's the opposite of what you want. You want the wick on the bottom and just nothing triggered. Actually, I'll take it back. This triggered right here, and you're trading the last 15 minutes of the day, but this did trigger here hypothetically. Let's see if we would have got our 1-to-1 off. Let's go see. It was mega whippy, but that's a 64.50 for 65.50. You did not get your 1-to-1 off. Again, I usually don't bother with the last hour, and I wasn't trading here. And again, it was just majorly whippy yesterday afternoon, right? But long story short, as you go through those trade setups, right, and you look where your key entries were, and had I not gotten so agitated, right, if you look for the day, and I'm not really even trying to duke it out at the end of the day, guys. Entry was here. That was your entry for that huge rip, and then you had one more in the morning at 10:48 for another huge rip, right? And it just came close. It didn't quite set up, right? So then remember the next piece, as I'm droning on here, is you could have looked on the other channel. So go look at I wouldn't have been lower, but I might have been higher at the 175. And if you look at the 175, you just want to go back to the same time frame and go, hey, did I get set up on my trade anywhere within here, right? And the answer to that is you did not. You got 830 again, super whippy area. You can see it just wasn't really, I know we moved a lot, but it wasn't really robust. This was the only long off the 175 that I see that set up. One here, which obviously paid you, and one here, which obviously paid you. I don't think we had another setup. I'm going to go through and look really quick, but I don't see it. I take it back. That triggered, it never gave you the orange triangle underneath. Again, that was right in the last few minutes of the day. If you had taken that, again, when it doesn't put that little orange triangle on the bottom, it kind of freaks me out, and I don't like trading it. You could have taken this short here, but again, who's going to short that particular environment, right? Okay, so one other thing that I want to go to. So what does that reaffirm for me, right? First of all, there were trades there. Just stay focused on the process, not on what I'm trying to, accomplish, right? In terms of, I misstated that. Keep your eye on the process, not on what I think the market should do or shouldn't do, number one. Number two, reduce the amount of pressure you're putting on yourself as to how much you make. I'm trying to get on a run for the end of the year. It's already October. I can put too much pressure on myself to accomplish that goal, and it can fire back against me, right? And third of all is, don't forget about location. It's very important. So the last thing I'm going to do is I'm just going to go through NQ really quick, and I think I actually want to use the 6 range bar, if I can find it. There we go. And just really fast. The other thing that threw me yesterday morning was, I think it was up to 5 range, but I was actually trying to get NASDAQ to roll down, and I was short in the morning, and that was contra to my trade plan. I just took it instinctively because it's set up so cleanly. So I waited till after 9 o'clock. I generally don't trade the first half hour, and I took the short right on this bar right here. And I got paid. I got paid fat, actually. It was a really great trade. What I didn't do is it reversed long right here, and I didn't take the trade, and I let part of the trade come back on me. I did make money on the trade, but I really had visions of, because, so here's what happened. I saw the left shoulder, I saw the head, and I saw us test up into the left shoulder and fail, and I thought in my head, so this isn't about being right, this is just being about what I did. I simply thought we could get this push, a big push to the downside, and that's what I was pressing for, and I locked my mindset on it. So I ignored this long when it set up, much to my detriment, right? Not only that, but if that's your head and shoulders, right? So I just covered the trade and I sat there and watched, right? Now if you look, what's the rule? As soon as you get above the left shoulder on the head and shoulders, purple bar, pink bar, arrow. Now in this case, while it wasn't a wick, we tested all the way back into it, and I could have just used the bottom of the bar. Again, that becomes a 5-point stop in this case. And then look at the reward that it gave you to the upside. It was just ridiculous. From the entry here to the high, that's 11,646 to 11,686. 40 points for $800 a contract, right? And I could have come right back in here again and taken the trade here. Could have come back again and taken the trade here. Could have even taken it all the way over here and still gotten paid, right? So clearly I just goofed, right? I left a really good amount of change on the table, right? And then if you look, excuse me, if you look into the afternoon now, where would have it failed? Again, I'm looking for the wicks to come in, so I probably would not have taken this, but reflexively, if I had taken the backside test of this trade, I would have gotten stopped if I used exactly this bar, which again I usually do because I'm trying to get that super high RR. Again, a lot of times you'll see when you come back on those bars, when they do form, if you'll use a 10-point stop on that trade instead of a 5-point stop, your survival rate will be higher. You'll have to reduce trade size to compensate for the larger RR, meaning the larger risk on the trade. You have to cut your trade size because now you go from a $100 stop to a $200 stop, right? And there's not one particular way that's correct. I could have come in right here on this bar, still gotten paid, right? So as you're looking as the afternoon is developing, right here, even though I would have closed the trade out or moved it to break even, so this is the place where I would have entered the trade, right at the top of the bar, still stretched me beautifully to the upside. And if you look at this, actually formed, but did not give me the wick, nor did I have this triangle underneath. It started to. This did form right here. And gave me the triangle underneath. And again, that was right at the top of the hour. And that trade gave you 11,669 all the way up to 11,726. Those are huge trades, guys, right? So when I'm in the room, I'm only human, right? A lot of times in the room, those guys want to predict, like, hey, I'm perfect. I can always read the trade. I don't get emotional. Well, I can tell you, I do get emotional. I have to work really hard to control my thinking process, but I do get paid pretty regularly and very nicely, and I've worked for a long time, over 30 years, at perfecting this methodology. I'm not selling it to anybody. For those who want to be in the room, you're welcome. For those who don't, that's great too. There's a lot of guys out there, and I understand that. And this is advanced trading, right? There's no question about it. So anyways, for those of you who are watching just on YouTube, if you'd like to join and see what we have, just send me an email. I will tell you the cost of the room is $300 a month, right? Includes the software setups and the access to the room. You're welcome to come and join for a trial. You can send me an email to TRADENPERFROM, TRADEN, perform @gmail.com. And that is all I've got, guys. It should have been a really kick-ass day, and it turned out to be just it was okay. So I know how to improve for Monday, what I'm looking for, and I will follow my process ardently, and it'll give us the P&L that we had on Monday, Tuesday, and going into Wednesday, and Thursday and Friday. Hopefully we don't repeat that again, meaning those were flat days, but if you show up for work, we might as well get paid, right? So anyways, guys, I will talk to everyone on Monday. Have a great weekend. This is Simon signing off. Have a kick-ass weekend, guys. See y'all.